Check out the video description for details. It's Friday, September 8th, and we've got a great show for you today. Every once in a while, we will highlight high risk stocks, high risk, high reward. It's typically not our investing style. We stay away from them, but we like to highlight things for all different types of investors. So today we're going to show some high risk stocks, and the best way to explain what we're looking for is lumber liquidators. A lot of people may or may not remember. Wasn't too long ago that lumber liquidators was they were trading upwards of $100 plus a share, as you can see here from the chart, and they had over $100 a share. They had some issues with their product, potentially having chemicals in it and stuff that they were getting from China, and it plummeted bad. Bottomed out around $12 or so a share. If you can see that, yeah. So in the meantime, wasn't too long ago it started ramping back up. So you could get it at $12 a share. Now it's trading around $40 a share. So again, people were running from this stock. There was fears it was going to go bankrupt. I mean, a huge drop off. But now you could have basically quadrupled your money if you had the stomach to invest in it. So we like to look for solid companies that can spring back when they have unexpected crashes, or companies in general that just are hit hard, oversold. You can get in and make yourself some profit. Now, again, it's not the type of thing we look at on this show, and we prefer solid companies that pay a dividend. That's what we invest in. But we'll show it to you anyways. And with some news you may or may not have heard, we've had some hurricane issues lately, and we're going to be coming up with some over the weekend as latest hits landfall into Florida. So a couple of companies are getting extremely beaten down over that, and one of them, and we're going to take a look at it, is United Airlines. Now, United Airlines, it wasn't that long ago, they were making headlines for extremely poor customer service. They dragged the doctor off a plane, a big outcry. I did some articles on that and some videos about saying it was a good time to buy because it's going to spring right back. People are going to ignore that. And it sure did. And the stock was actually up 10%. Warren Buffett's buying more. But Mother Nature is hit, and United has taken a beating here. Let me pull up the chart here. They've slid quite a bit. You can see their huge drop off. United was upwards around 80s. This is a 6-month chart, and they're now down to about $60 a share. So a big drop off in that. Believe that there's cancellations and they're going to lose a lot of revenue due to the hurricane. So is United a good stock to buy into it? Well, certainly Warren Buffett likes it, and he's buying more and more of it, adding to his positions. He was very bullish on them. Statistically wise, no dividend, so we obviously wouldn't go with it, but balance sheet isn't the greatest thing in the world. 200 million in leverage cash flow. That's your cash flow after paying things off, and more debt than cash. We like to see it obviously the other way. So nothing really to write home about. They've had some good growth, certainly, and good things to say. Certainly. Bouncing back from that PR nightmare that they had, and I think it'll come back. It'll take a little while after hurricane season, but there may be a buy for you right there. United, you want to have them bounce back once everything gets under control with getting the flights back down in Florida and Texas and things like that. So they'll have some headwinds, but a good chance for them to spring back. Another one of the more annoying commercials that you see out there, Trivago. Similar situation. You have the turmoil going on with all these storms, and they actually said, and I'll put a link to the article on the Motley Fool. They had softened their guidance, which is not a good thing when you have that amount of turmoil. They are getting pounded again today. They've been sliding lately. I'll pull this up full screen here. Down 3%. Let's take a look at the statistics, really. Fairly expensive stock, 40 times earnings. They're a little better situation, balance sheet rise. $200 million in cash, no debt. Free cash flow of $14 million, which for a company their size, no debt, not bad. They've had some really good growth. So nice little stock. Doesn't pay a dividend, so it's kind of been ignored by us. But they have gotten clobbered right around that same time. You can see in this 6-month time frame, upwards in the 20s, literally cut in half, down to $11 a share. Big drop off. So they spring back to where they were. You're talking double your money. Neither one of them are really my cup of tea, but if we're looking for stocks that are the old high risk, high reward, they got their bounce back. Look at Lumber Liquidators. You get in at where it finally establishes a bottom, four times what it was trading at. So lots of opportunities with those stocks. Personally, I wouldn't invest in them, but if you have the stomach for higher risk items, there's two for you. United Airlines and Trivago. Give them a try. Let me know how you make out. Post some comments in the feedback. Give us a thumbs up if you enjoyed it. Subscribe if you haven't already to get the latest investing news for gamers. Enjoy your weekend. We'll see you Monday.